Hello, welcome from Trend Signal for a review of the data and events week beginning the 22nd of July. Despite the hijacking of this British flagged oil tanker by the Revolutionary Guard in Iran, crude oil seems to have remained relatively calm, although picking up a little bit as we speak on Monday morning. Trump signaled early last week that tensions between the US and Iran would ease as a diplomatic solution was or is sought, similar to what's happening certainly from the UK's diplomatic service as well, which has put paid to, I guess, increasing concerns that a conflict was inevitable. Stock markets last week slipped really. Quarterly earnings came in okay, generally matched expectations, albeit the bank's outlooks were less rosy, I suspect, than some analysts were looking for. Concern also mounted, followed a speech or two from Jay Powell, the chairman of the Federal Reserve, that interest rates may not be cut as aggressively as the market may be hoping. Hence the rebound in the dollar last Thursday and a fall in equities Friday. Far East markets on Monday morning as we speak now. Little bit on the slide. Hang Seng down over 1%, China and Japan less so. This week's data, let's get straight on to that. For markets here in the UK, obviously this is dominated by the election and result of the new Tory leader for the Conservative Party, who's going to replace Theresa May as Prime Minister. In the US, we have more second quarter earnings, and in Europe, we have the ECB meeting this week. It's all very delicately poised there. Monday, well, the vote for the Tory leader concludes Monday evening. The result should be announced on Tuesday sometime, I don't know when. Theresa May will officially resign on Wednesday, and that's when Boris Johnson or Jeremy Hunt will assume power. The odds are very much in favour of Boris Johnson being the new Premier. Tuesday, no real data to speak of, as you can see on our Forex Factory calendar. Obviously, apart from the announcement about the new Tory leader, of course, which is keenly anticipated, not just here in the UK, but obviously in the wider EU and its implications to all. Wednesday, we have Eurozone manufacturing and services sector data. Purchasing Managers Index is what PMI stands for. Expected little change, really, in the key economies of Germany and France, which got a German manufacturing data which fell off the edge of a cliff due to the trade tensions between the US and China. Certainly just seems to holding at steady at 45, but well below 50, which is the sort of level at which the manufacturing sector is contracting. Anything above 50 and it's expanding, but it's a very poor reading and has been for 2 or 3 months. US, we have crude oil inventories not listed here for some reason. They're now making it even less important and saying it's low impact. Well, it might be low impact, but it does impact anyone trading crude oil. That's for sure. We're looking for crude oil inventories of. Let's just find it. Well, we're looking for another drawdown. Last week we had a greater drawdown than expected. Certainly the Straits of Hormuz has turned out to be quite a talking point, and I think that'll have the greatest effect on the markets. As important as the stock levels are, the diplomatic efforts been that are taking place now to avert any conflict is what will determine the price of oil, really, rather than these stock levels. Thursday, let's just get rid of all these low impact ones that are really clogging things up. There we go. So Thursday we have the European Central Bank, the ECB monthly policy meeting. We don't expect any change in headline interest rates, at least we being the market is not expecting that, but the European Central Bank and Mario Draghi have indicated that they will loosen monetary policy. European bonds or Eurozone bonds have reflected that, having gone sharply higher with yields plumbing the depths again, negative yields all over the place now. So they're loosening in monetary policy. That will be in the form probably of restarting quantitative easing or some other measure. We expect the bank to change its guidance on growth and inflation outlook in the Eurozone. So it's very much sort of depending on what the bank says rather than what it does. And if it doesn't do anything and doesn't change the guidance, I think the euro is in for a significant rebound. I'm sure because Mario Draghi is well aware of what how the market interprets things, will make sure that the market gets the right message. Any announcement from the European Central Bank will definitely affect interest rates, will have a direct effect on the euro, of course, equities and bonds, not just in the Eurozone, certainly in the UK and in the US as well. Clearly, the effects of weak inflation and lower growth, exacerbated by the US-China trade tensions, are really being felt by all major economies, not just the US, not just the Eurozone. Friday, finally, the last piece is the US second quarter GDP data. We're expecting a drop off to 1.8% compared to 3.1% in the previous quarters. And that's, well, I can just sum it up by saying that's trade tensions for you and the effect thereof. And obviously, the effect of the tax cuts that happened at the beginning of 2018. They really are falling out of the equation, as it were, now. So, hence the reason why the Federal Reserve is going to act. And we'll find out what they're going to do next week. Thank you very much for listening. All the best. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.